Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look at the gold market now, second weekly report. So gold market right now stands among the most interesting markets across the board because it's really could provide the interesting setup within the few weeks with the possible upward bounce. Bounce could be significant. And the second is that the fundamental background for the gold market is more or relatively clear. So gold market definitely currently stands depressed, and it's very difficult to suggest and imagine what particular factor could reverse the situation, except maybe some political or geopolitical collapse maybe. Because the situation with the United States dollar stands strong, numbers are good, there's gross domestic product and non-farm release. It also was positive. So interest rates in the United States are growing. So as you know, the 10-year yield returns back to 3% level. All this stuff is pressing on the gold market. Meantime, although we keep our long-term bearish view on the gold market, in the shorter term, as we have discussed within the recent 2 weeks probably, market stands at a strong weekly support, and we expect at least technical response, technical respect of this area. Usually it stands for the 30%, maybe slightly higher. It's retracement, it's reaction on the strong support. So on the background, we have relatively clear setup, but the major concern here is what pattern will trigger this upward action. And that's really not quite clear because, as we said on Friday, when butterfly has been completed, we said it's better to close shorts, but do not be hasty with taking long position yet, because some patterns could be formed that could trigger this upward action. So what we have on the daily? On the daily chart, market stands in some kind of the channel action to the downside, forming the harmonic retracements here. As you can see, it's very harmonic. Market repeats again and again. Now market has completed the target. This is the weekly target and some butterfly extension. It's been completed on Friday as well. And currently, there are at least two patterns could be formed that will trigger the upward action. First pattern is a head and shoulders, because we have the butterfly on the follow time frame chart. And market could form this kind of pattern. This is very typical. The butterfly turns to the head and shoulders. Also, we have nicely looking bullish divergence with the MACD right and major support. So our fruit is ripening gradually, and this market is building energy for a possible bounce. So if market will continue to move higher, this could become the head, then retracement to 1216 approximately. This should become the right shoulder. So that's the first pattern that we could keep an eye on. If indeed this will happen, that will be the major point to watch for. And that will be potentially the point where we will be watching for taking the position approximately 1216, the bottom of the right arm. Second pattern that could be formed is a possible free drive. So if market will form the first drive, this will become second drive, market will fail here and start dropping, it could reach the 1196, 1195. This will be the point that we'll be watching for taking the long position. The same stuff if market will turn down immediately. So start dropping. In this case, we will be watching just for 1618 butterfly. So it's 127. This could become 1618. And situation with the hand shoulders could repeat, but from the lower level. So that's the first scenario that you could follow with the taking the long position, how it could be taken. A most conservative approach, guys, for this, you could not deal with the patterns, but you could watch for breakout of this channel, so breaking of the lower lows, lower highs tendency. If market will start move higher, breaking this area starts to show some retracement, that will be another opportunity for taking the long position. But here's one trick could happen, that after the minor retracement to the 1245, 1270, market just could reestablish downward action. So in this case, retracement could be over, because we have talked about the weekly bread and butter sell on the weekly in today's weekly report, and it's approximately should appear somewhere around 1265, and that will be could become the final point of the retracement as well. So although this is most conservative approach, but it's also could happen that you just miss this trade and will not get the chance to take the long position. Another opportunity to go long is dealing with upward action here. So in fact, it is better to take position as close to the level 95 as possible, because this is actually invalidation point. While market stands above this area, bullish setup stands on the table. So we will keep the weekly scenario with the possible upward action from the major support until market will hold above the level 95. That's why if we will take position as closer to level 95 as possible, this will be just it will be much better. Still, you could take the risk in trying to take position here probably, but it would be better to take some passion on the background. For example, if market will form something like, I don't know, maybe Gartley steeple to buy here or something of that sort, in this case you could try to take the long position here against these lows. But here, as soon as market will show minor bounce, just starting move higher from this point, move your stop to the break even, because on the daily chart, guys, we have bearish grabber. As you can see, on Friday, market has formed a grabber, and it suggests the taking out of these lows. It means that chances on the drop below these lows and reaching 1195 are significant. Actually, we expect something of that sort on the euro, on dollar index as well. So we expect another leg down on the gold, on the euro, but move up on the dollar index. Chances here is really significant. My opinion is that it's better to wait for another dive to 1195 or appearing of the clear pattern, for example, hand shoulders. Because actually, guys, if the hand shoulders will be formed, you will take position approximately at the same point, but you will have on the background the clear pattern. Currently, it's more risky situation for taking long position, and because another leg could be formed, we have the bearish grabber, and we do not have here on hourly chart no clear bullish patterns yet, just kind of upward action on Friday, position taken on the non-farm payroll list. So that's not sufficient context for taking the long position yet. That's why we're calling mostly for waiting either the clear pattern on the 4-hour time frame chart, something of that sort, or reaching finally the bottom 1195, and here is probably some opportunity will appear to take the position. Maybe minor butterfly here will be formed as well, so market will reach 1195. So at least here at this point, risk reward will be minimal, because here we could place the tightest stop order compared to any other opportunity for taking the long position. So that's our view on the gold market. That being said, we still keep on the table the chance on upward bounce, but we need to get the clear pattern. Today we discussed what particular pattern could be formed. So we are waiting either for the hand shoulders or we are waiting for the drop to the 1195. Taking position immediately here, some minor pattern stance is up to you. But in this case, if you still will decide to do this stands beyond of our scenarios. It's just I'm showing you that really could happen and you could try, but it's not our major scenario. If you will still follow this, trying to move your stops to the break-even as soon as possible. At least when the market will start showing the minor bounce here, move your stops to break-even, because chances on the another leg down exist just because we have this grabber on the daily chart.